You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
You know, risk management is job number one, and you know this, you're a subscriber. So on Monday, I sent out an alert to my subscribers saying that I was selling a few positions to build up some cash, because basically the biggest risk going into this election is a contested election, and which could see all assets, including the gold sector, sell off.
Welcome back into Mining Stock Education. Thank you for tuning in. Well, I'm touching base again in this episode with the Junior Miner Junky, David Erfle. If you're not familiar with David's service, head on over to JuniorMinerJunky.com. David just absolutely loves speculating in mining stocks. Therefore, he self-named himself the Junior Miner Junky. David, how's that addiction to mining stocks going this week?
Hey, Bill, thanks a lot for having me on again. Yeah, it's an addiction, all right. But with that addiction comes proper risk management. You know, I mean, I've got all my savings in these things, and now it's run up to about $1 million portfolio. So, you know, risk management is job number one. And you know this, you're a subscriber. So on Monday, I sent out an alert to my subscribers saying that I was selling a few positions to build up some cash, because basically the biggest risk going into this election is a contested election, and which could see all assets, including the gold sector, sell off. You know, if either candidate does not concede the election, and basically investors begin to lose faith in the actual election process. This is a very real scenario that could happen. So having some cash in your portfolio right here is pretty prudent. The gold level to watch is, on a closing basis, is 1865. If we get a COMEX close below 1865, I think then we could get a quick move down to that 1750 to 1800 area, which is very strong support. And if you take a look at the monthly chart, that would be a very healthy correction of a huge move that we've had that needs to consolidate here. So in the long term, I really have no doubt that this is a bull market that will continue in the next 2-3 years. But in the short term, it's a little murkier because of this election.
David, how do you self-analyze yourself when you're looking at the macro political situation and you're coming to conclusions? How do you critique yourself to see if you're being objective when you take that and then it influences the way you sell stocks or buy stocks in the gold sector?
That's a great question. I have to completely remove myself of my own biases and just follow the market. What's the market telling me? And 4 years ago, right into the election, the gold miners were selling off into that election. And they were basically telling us that once the election results were known, the gold price was going to sell off. And that's exactly what happened. I'm not saying that will happen this time, because there's so many more unknowns here in this election, but it's still a pretty good idea to have some cash just in case. And as far as selecting what I'm going to sell, because, you know, just about all my positions have done really well, and there's quite a bit of profit in the portfolio. The one position that I decided to sell was in my top 10, but it had become very overvalued to its peers, and now has come to be close to a $2 billion market cap. So that's getting out of junior status, and it has had quite a large rise, and it's trading at its all-time highs here. So it's a good time to take all my profit off that position, as myself and my subscribers have done really well with it over the past few years. So and there was also another position that the company just released a PEA recently, and it's not really a tier one asset. They calculated the gold price at $1,450 with the PEA, and I figure it'll be susceptible to more selling if the gold price does sell down to that 1750, 1800 area. And then there was another stock that I just missed my timing on, and I think maybe I can get it cheaper down the road. So this has built up a nice 10% cash position in my portfolio now, and I feel more comfortable going to the election.
What about tax loss selling? I think last time we spoke, that wasn't going to be much of a concern for you. Is that still your position?
Pretty much, but if you take a look at some of these juniors that have had huge runs, I mean, so let's just take a look at the GDXJ. It's gone up. It went up 183% in 4.8 months. So, that's got to consolidate. Those gains have to consolidate for a while. And some of the juniors went up 4, 5, 6 times. And I was fortunate to have a couple of them. So I've trimmed a few of them along the way because, once they get too big in your portfolio, it's a good idea to trim some of your profits. But if you take a look at some of those stocks that have gone up that much, the investors that were late to the party in some of these stocks, they're going to be selling for tax loss because if they got into a stock that had already gone up 5 or 6 times, and it's been selling off, and they have a loss on it going into November, December, they're going to sell it. And also, you have to take into account that most of these juniors did financings. Since April, the financings have really kicked into high gear. So a lot of that free trading paper is going to come. A lot of that paper is going to become free trading here, and it's starting to right now. So you take a look at the companies that maybe they've gone down 20 or 30%, and they have their financings come due here. Their 4-month holding period coming off. They're going to sell down some more. So you just have to take a look at all these things before you make your decision on what to sell and what to buy.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. That's OsinoResources.com. David, I received an email from a newer mining speculator, a young man in his 20s who has saved up US $75,000, and he emailed me and said he wants to deploy half of it into the gold sector. If you were having coffee with this gentleman, he doesn't understand the gold sector the way you do, but he wants to deploy about $37,500 into it because he understands the general value proposition. How would you initially advise him?
Oh, that's a good question. If he has no exposure whatsoever to the gold space, I would take 10% of that and buy some physical gold and silver, and then the rest of it I would split up into some subsectors in the mining space. I would probably put some of it in one major. We're talking about somebody who's brand new to the sector here.
Yes.
So I would probably take some of it and put some of it into one major, maybe 2 mid tiers, and then one high risk exploration company, and then one medium risk developer, and then maybe one growth-oriented producer, a small cap growth-oriented producer, but heavily researched, of course. And since this person is new to the sector, I would suggest subscribing to a newsletter, mine or somebody else's that are highly respected in the sector. There's a few of them. Because you do not want to go blindly into this space without any knowledge of what you're doing. I mean, I did that 18 years ago, and fortunately I came out well on the other side, but I did a lot of research first, and I subscribed to a lot of newsletters. And I found out which ones were good, and I found out which ones were bad. And the ones that were good, I stole some of their ideas and incorporated into my own before I started mine.
Dave, you and I focus a lot of our weekly attention on studying these junior miners or staying on top of the positions that we've bought. But for somebody that either doesn't have the time to do that or doesn't want to do that, would you recommend maybe just buying a position in GDXJ?
Well, they could, but GDXJ is not a junior ETF. It's a mid-tier ETF, and there's a lot of bad companies in it as far as I'm concerned. I've spent a lot of time building my own GDXJ, which is filled with juniors. It holds now 27 positions and now some cash. And as far as just buying the GDXJ, sure, you'll do well, but you can do better if you commit a little more time to it.
I'd like to go back to how you integrate your macro view when it comes to the political economic system and the more bottom-up fundamental approach that you take to studying the individual companies before you invest. I've heard funds that have even told me, Bill, we're a bottom-up fund, so we only look at the fundamentals of the company. And then I've heard other savvy investors say, Bill, I always start with the commodity price and the influences on the commodity price of the underlying explorer, developer, or producer. I tend to veer more towards the big picture, top-down influences, and then from there select the juniors and do a bottom-up study. Can you talk about how you integrate the two, Dave, and how you've developed your approach over the years?
Oh, sure. It's there's so much goes into it. It's basically the macro, of course. We've, as far as the macro is concerned, I think all your listeners can agree that the macro climate right now has never been better for the gold price. We all know that we're in a bull market again now for the first time in the juniors in 8 years. So now that we know we're in this bull market, but we also know that a lot of the easy money has already been made, going back to what I said earlier during this chat when I said that the GDXJ has gone up 183% in 4.8 months. So, and also during that time, just about every junior that needed money has cashed up, and that includes the bad ones. So there's a lot of bad ones out there. So you got to do a lot of research to separate the wheat from the chaff. But the first thing I look at is always people, and then the management, and then the second thing I look at is the jurisdiction and how large the project is. And then I just go from there. I mean, there's so many little intricacies that you look at before you make a decision to buy, and also technical analysis. I've followed companies for years before I took a position. My largest win during this bull cycle that started in 2016 was Novo Resources, and I followed that company for years before I took a position. And fortunately, I took a position at the right time. So you can never do enough due diligence as far as I'm concerned, and that includes not only before you purchase it, but after you purchase it. And when I started this service, it was the best thing that I could ever do as far as my trading performance is concerned. I've become a much better trader because I feel, although I know I'm not responsible, I feel responsible for my 400 plus subscribers now that are following my every move. So I do as much due diligence as I possibly can. I create relationships with all these management teams, and I just pour over as much information as I possibly can before I make a decision.
When you're doing technical analysis on these juniors, what are the main things you're looking at, the main indicators in regards to moving averages or otherwise?
Well, as far as technical analysis is concerned, I try to keep it as simple as possible. I only use the relative strength index to determine if a stock is overbought or oversold because it's simple. So, strong trends basically bottom at 40 to 50 RSI in a bull market and surpass 70 or even 90 in strong junior up legs. So if something gets to 90 RSI on a weekly basis, I'm going to trim that position if I was fortunate enough to get in early before that took place. And moving averages, I look at the 1850 and 200 day and week moving averages, and also trend lines. But on the flip side of that, a lot of these juniors, technical analysis doesn't work as well, because some of them can be illiquid, and a lot of them are still very undervalued. So if I find a really undervalued stock and maybe it's a little overbought, and I feel the sector is about to make a strong move, I'll go ahead and purchase it, because I'm a newsletter writer and I found this, and I'm thinking to myself, well, hey, some other newsletter writer might find it too. And all it takes is one high profile newsletter writer to discover a stock before I do or before anybody else does, and the stock will just take off. So you got to take all these things into consideration, Bill.
No, that's excellent advice, Dave. And your newsletter subscription, are there still openings?
Yeah, it's about 85% full right now, and there are still openings right now. Yeah, thanks for asking.
JuniorMinerJunky.com is Dave's website, and if you're newer to investing in the junior mining stocks, such as the young gentleman that emailed me last week, use David as an example, and you can go back and find some interviews even I did with him back in 2017, where he shares a little bit more about his journey. But as he mentioned, he didn't come into this from a finance degree or being raised in a mining family. He discovered gold and then discovered the gold stocks and studied his way to success. So just use that as an encouragement. You too can make money in this bull market, but make sure that you're applying yourself and doing all the necessary due diligence and action steps that you need. Well, Dave, I always appreciate talking to you. Thanks for coming on today's show.
Always a pleasure, Bill. Thanks again for having me.